Hello, everyone. I am not sure what I'm doing because my sidekick is not here at the moment, but welcome to episode 2 of Power Hour. I don't know how many of you are in the room. I may be clicking something wrong, but I either have to wait until he shows up because I don't see anybody joining the stream. Oh, there are 6 of you. Okay, so comments are welcome. How's it going? How's everybody doing? It's been a turbulent week, to say the least. I'm going to talk about two topics. I'm going to show you guys my trading screen, obviously. And on top of that, I'm going to share you guys with my results of my small Robinhood trading account of what took place. But let's talk a little bit about the markets. Certainly enough volatility. With it started actually about a week ago, 10 days ago, with the most announced or pre-announced war in the history of the world. Obviously, Iran taking action, and then Israel responding. But that part of the world has been a source of chaos for the last 1,000 years, and I think it's going to be that way. So, if you're buying and selling stocks or whatever else you're doing just because of that, then you're going to get whipsawed, and that's what happened. Initial reaction was negative, and then what happens? Buyers step in. However, there was bigger news this week, starting Monday, was the Magnificent Seven earnings, one after the other. Yesterday we had three. We had Google or Alphabet. We had Microsoft, which absolutely both did phenomenal. They blew it out. And then the day before, we had the opposite with IBM and Meta, or the old Facebook. They were disappointed. They disappointed the market. And then, sure enough, market took a dump yesterday right at the open. Facebook lost about $200 billion in market capitalization. Now we're back. So now, how did I do? I'll let you guys know. I have multiple trading accounts, obviously, and so yeah, I did pretty well actually. Volatility is my friend, but you have to know what you're stepping in, what you're stepping out. Let me share my screen with you guys. No, that's not the one. See, that's why I need Chris. Oh, okay, this is the one. So again, going back, this is my trading screen. Hope you all can see it. Hey, Rick, how are you? So this is happening live, my trading screen. Obviously, we can see what Meta did over the past couple days, took a massive dump. This is what the stock is doing. And then conversely, what Microsoft did, it had a big gap down. As you guys can see on my cursor here, follow me to the upper right-hand corner of the screen. And then today it's bouncing back. I'm going to give you guys my general opinion of what the market is doing. And it's going to be a turbulent time. The volatility definitely has picked up. It is definitely not for the faint of heart, to be perfectly honest with you all. It's definitely something you guys need to pay attention to if you're in the markets at all. So with that said, I see Chris here. So let's get into a couple of different topics. Hey, what's up?
How's it
How you
going?
doing? How are you?
Oh, not too bad.
Um,
Not too
all right.
bad.
So Chris is here. Class is in session, people. So I've been talking about what happened in the markets, and if you guys have any questions, please put it in the chat, um, and then we'll get to the Q&A later. But so two topics today. What are those topics? Well, on the last episode of Power Hour on Monday, I talked to you guys about what kind of trader I am, what I do. I basically watch charts, right? I watch certain patterns that repeat themselves. They have repeated themselves for 100 years. and nothing is going to change. Also, one of the most important things I said to you all is keep it simple, stupid method. I'm a huge believer in it. I've tried everything. Ultimately, this is not done overnight. I'm here to tell you the truth, because a lot of YouTube and social media, influencers are going to tell you, oh, this is quick rich get scheme, money is going to pour in. No. 85 to 90% of stock jockeys or day traders lose money. And why did they do that? Because they haven't figured out what works for them. And it takes years. So it didn't take me 30 years, but I'm still learning. So I call myself a technical trader, meaning I watch charts, right? And then I have formulas that work for me, and I have honed it in, and it is the Bible. Everybody is different. Everybody's time frame is different. I am a swing trader. I'm not a day trader. I still day trade. In fact, I day traded today. I'll show you guys my results in a minute when I share my screen with you. My computer day traded a stock literally within 6 minutes. I think I traded 8,000 shares of the stock, bought 8,000 shares, sold 8,000 shares. It was very profitable. That's my main account. But I'm also going to share, like I said, my tiny little Robinhood account that I started with, which my referral link is in the show notes. If you guys use that, I'll get some free shares. You'll get some free shares when you open your Robinhood account. So with that said, let's get into topic number one. Like we did last week, we're going to have two topics and Q&A. So there is two types of analysis that you guys can go through. One is technical analysis, which actually I'm a hybrid of it. I call actually myself a techno-fundamentalist. Okay? Techno-fundamentalist is, I watch charts, I observe what certain patterns, and fundamental analysis is basically you listen to earnings conference calls, you obviously not only that, but you have to know what the company is doing, how the sales are doing, what revenue growth is, what their bottom line is. So I'm a hybrid between both. So what is the difference between fundamental and technical analysis? Fundamental analysis is a method of evaluating securities, which is what if you guys ever watch CNBC, you will see a lot of analysts out there. Those are all fundamental analysts. They try to figure out the intrinsic value of a company, and the assumption of technical analysis, on the other hand, is all known, and fundamentals are factored into the price. Meaning, that's why I look at the chart. That's why I said what I said last week, right? Picture is worth 1,000 words. You can't ignore either, but you have to pick one side or the other. So if you're a fundamental analyst or do analysis, this is a simple thing to do, by the way. So we all use a lot of these companies on our daily lives. Okay, you don't have to be an analyst to figure out what fundamental analysis is. Okay, so if you step into a Costco every single time, I mean, if you guys figured out Costco over the last 10 years, company has done amazingly well. Every time you go in, if there's no customers in there, the business is not doing well. Same thing with Best Buy, same thing with Walmart, same thing with Target. These are all public companies that you all use and shop. And on the internet side, your Google, your Facebook, your Instagram, right? Part of Facebook, your Twitter, which was public but got bought by Elon Musk, your Tesla, all these things, General Motors, Ford, you drive their cars, or Shell or Exxon, you buy their gas. You guys can do this on your own. Obviously, analysts have a much wider net. But to me, the important thing is, if there is something bad happening to a company, the chart or the trend of that chart is not going to be good. I've never seen it in 30 years. So the next screenshot, it'll tell you guys about what using technical analysis will do. Okay. A lot of these analysts, they have their own, obviously, technical analysis departments as well, because you can't ignore it. It's not something you can ignore. So professional analysts use technical analysis in conjunction with other forms of research. That's me. So I use I use technical analysis, but I use fundamental analysis as well. At some point, if I'm going to hold a stock for a year or two, invest in something, I want to know what they're doing. If you're a stock jockey, you're a day trader, you're buying and selling, a million shares a day of 10 different companies, you don't have to know. It's just the price. The trend is going in the right direction. Technical analysis can be applied to any security with historical trading data, which is correct. So what I would suggest is, even if you go to Yahoo Finance, if you go to free charts, right, you will see the pattern. Or if you look at a Bitcoin chart, or you'll see a pattern. That's the trend that exists. And I said it last time, the trend is your friend. Technical analysis attempts to forecast the price movement of a virtually any tradable instrument. This is correct. It could be in equities, it could be in futures, it could be in commodities, it could be in crypto, it could be anything. And there are proven patterns that have repeated themselves that you will have to pick a few. There are many, there are hundreds of different patterns. You can't just also have no focus. You have to focus on what works for you. And that comes with experience, that comes with doing something over many, many, many years. So there is no shortcuts in here, right? So at the end of this segment, I'm going to tell you guys what I have read as far as technical analysis is concerned. You can Google technical analysis, and it'll tell you a whole bunch of things. But I am a huge believer in reading, right? I'm going to recommend 2 books. And they're not expensive. They're like $20, whatever, on Amazon. I'm not an affiliate with any of these people, but on the left, Technical Analysis of the Financial Markets, John Murphy. He's an amazing, amazing, amazing technical analyst. I have read both books. And I think this is a great starting point, right? So that's why I'm here. I'm here to educate, but then I cannot inform and educate about everything, right? You guys have to do some of the legwork as well. So assignment number 1, pick either one. I would recommend John Murphy's book because it goes into more in detail. But if you're an intermediate or advanced, go for Technical Analysis of Financial Markets by John Murphy. If you're just a beginner, you don't know if a chart hits you in the face, you don't know what it looks like, then go with the book on the right, The Beginner's Guide to Technical Analysis. So going forward, if I'm sharing my screen with you, if I'm telling you guys something, we're talking the same language, right? We want to make sure that we're on the same page. I'm not just saying something and none of you understand, and then you get turned off, right? I don't want you to get turned off. By the way, thank you all for the support. We just broke 500 subscribers in about 10 days. I appreciate it. Chris does as well. We can't do it without you. So share, the videos. We're putting out 2-3 videos a week already. Share those videos. Please subscribe and hit the like button. So that's the YouTube jargon that we have. Once you have technical analysis kind of starting figured out, then we'll be talking the same language. So the second topic I want to go into today is going to be basically rules of trading, right? There is many, 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 many rules to follow. But again, you have to hone these rules to what works for you. But I'm going to go quickly what these rules are, right? Okay, rule number 1. Always use a trading plan. You have to have a plan. Now, some of you may have crossed over from the other channel to this channel. You're welcome. What I say on the other channel is the 3 Ps. Actually, the 3 Ps that I apply to gig work or whatever work I'm doing came from my 30 years of trading. Okay. What are those 3 Ps? If you don't know, if you're new to this channel and you don't know anything about the gig economy, great. The 3 Ps are patience, position, and planning. Well, here it is. Always use a trading plan. You got to have one. If you don't have one, your trading decisions is going to be so much more difficult, so much more confusing, right? And you're definitely going to go through a lot of paralysis through analysis. You don't want to do that, right? And I said it last time again, I'm saying it again. Keeping it simple, stupid is the most important thing. Number 1, don't get inundated with all this other stuff that you read on the internet. Focus on one thing. Find out what works, but definitely that comes with having a plan. Number 2 is treat trading like a business, okay? It is a business. Okay, you can be spending an hour a day on it. You can be spending 3 hours on it. You can just spending all day. I'm on the West Coast in LA. Markets open at 6:30 a.m. I'm up at 5:30 every day. Why am I up an hour before? Well, I want to see what's moving. If any of my stocks have news, if earnings came out the day before, like this week did, many different stocks. I want to read some fundamental stuff, right? And I want to prep myself for the day, make myself a cup of coffee, wake up, and at 6:30 when the bell rings, we call it the bell rings, old days. When the bell rings, what are the books? Can we put them on the chat? Yeah, we will put them on the chat. Or you know, watch the replay and then take a quick screenshot, and then you can work out that way as well. So treat it like a business. I mean, it is your business. If your store is open for an hour a day, you have 1 hour a day. Figure out you own a hamburger store, right? You have to treat it like, okay, what's your cost of food? What's your labor cost? What's your utilities, right? You have to figure all these things out. So in trading these days, the costs have been really lowered with, free trading, as they call it. It's not free, obviously. They make money on your order flow because you're creating liquidity for them. But what needs to happen is that definitely treat it like a business. Create a simple spreadsheet, even if you're paper trading or actual, you have your money on the line. Okay, have a P&L. I mean, you need to know P&L. With a one click of the button, you can see how your week went, how your month went, how your year is going. Definitely treat it like a business. Use technology to your advantage. Look, none of us can say, I don't have enough tools. Today, there are so many tools. Okay, it comes from a PC or this thing that we have in our hands, right? I mean, hey, that thing can send a rocket to the moon, right? There's no reason for you, if you're bored, instead of watching some garbage YouTube TikTok, read on Yahoo Finance, or you go to Google Finance and read some news, read about technical analysis, watch some of my videos. I mean, look, you have to invest in this, right? If you don't, what you put in it is what you're going to get out of it. If you don't put anything into it and you just wait, put the food here, it's not going to work. But technology, we all have it. We all live with it, like it or not. And today, it really, the playing field has been equalized. When I was behind me, those days, we as traders had definitely massive advantage over retail traders, right? Because none of you had the technology. We had the technology. But today, everything has been equalized. Internet is wonderful, so please use it to your advantage. Now, rule number 4, one of the most important things. Rule number 4 is protect your capital. It is easy to make it. It is very difficult to keep it. Okay. That's why I told you guys on the first episode, do not be stock jockeys. If you made your money for the day, just like a business, quit. You're done. If your goal was $100 a day, you made $100 a day. If your goal was $100 a week, you made your $100, you're going to lose it. Okay. I mean, there is no reason to keep pushing it. And protecting your trading capital comes with a lot of risk management. You have to understand that the risks are very high in this game. Okay. Like I said previously, 85 to 90% lose money. But think about this. If 85 to 90% is losing money, that 10% is making what 85 to 90% is losing. Is it easy to get into that 10%? No. Can I help you with it? I'm certainly going to try. Am I one of those 10%? Yes. So that's comes with risk management. Risk management meaning you have to have pain thresholds. I have seen more day traders. Okay. Look, I'm not smashing day traders. There are some successful ones. They like the adrenaline. They like the action, right? They like the Vegas, part of this, which is fine. But what happens is that I've seen so many day traders become bag holders because they don't have discipline. They don't have risk management. All they do is they buy something, they hope and pray that it's going to work out. If it doesn't work out, from day traders, they become long-term investors with one garbage stock in their portfolio. Don't do that. Risk management is key to protect your trading capital. Rule number 5, become a student of the markets. Absolutely. Again, Use rule number 3, use the technology you have in your hand in the cell phone to study the markets. How do I study the markets? Like I said, I'm a techno fundamentalist, but I would say 70% technical analysis, 30% fundamental analysis. If you want to become either one, great. But I think the hybrid version works best for what you're trying to do. How do you become a student of markets? You read, you educate yourself. That's why you're here watching me. There's like 24 of you here. Great. So now, rule number 6. Risk only what you can afford to lose. Lose being the key word. Most of you will lose. And again, I'm not sugarcoating it, right? I watched some this week just to understand where people's ideas are. I watched some YouTube videos. Every single thumbnail that I saw was, oh, look, I made this much. Oh, look, I made this much. Not one video, very rarely, 1 out of 10 would be, oh, I got smashed today. Well, that's the reality. That's what we're going to do here. We're not going to sugarcoat things. We're going to go the way it is. This is also, for day traders, this is valid. For me, it's not so much because I position trade and I swing trade. I have more holding power, right? I mean, my capital is a lot more. But if you're trading with like $500 or $1,000, if that's all you can, and if you lose all of that, and if that's not your rent money, great. But a lot of people make the mistakes, just like when they go to Vegas, they lose a lot more than they can afford to lose. So, and that also goes with risk management. If you don't have risk management, you most likely is going to lose more than you can afford, because it's an emotional thing. You lose more, you'll chase more. You lose more, you'll chase more, and then at the end, you'll burn your account out, and you're gone. Develop rule number 7, develop a methodology based on facts. Yes, important, just like I said, over years, I have figured out what works for me, and you will figure that out as well for yourself. But, look, there's a lot of fluff out there, right? I'm going to shoot it straight. I'm going to come to you guys clean. Losses, wins, everything. And definitely, if you're going to consume some content, make sure it's from reputable sources. Okay. Facts are, a lot of people don't talk about facts these days, right? One fact I said right away, 80 to 90% lose money. That's a fact. You can research that. You can do whatever you want. Another fact, trend is your friend. If a trend is your friend, you can follow a trend and hold a stock for 3 months, 4 months, 6 months, a year, trade in and out of it, whatever you do. Those are facts. You can't run away from facts. This rule number 8 is something that a lot of day traders use, and they get whipsawed quite a bit. And I'm not a huge fan of it. That's because I swing trade or position trade. I scale into positions. I scale out of positions. To me, that's like planting a field of corn. Okay, I plant a little bit, I plant a little bit more, I plant a little bit more. When is my trade stop loss? Well, if the weather report says this year there's going to be a bunch of freezes and your corn is not going to get to 8 feet high, well, I'll chop it out. I'll just cut my losses short and look for another day that's going to be beneficial for me. Always using stop losses. Yes and no. You can have mental losses, mental stop losses. But then what happens is that's when those day traders don't have actual physical stop losses and they turn into bag holders. I use very rarely stop losses because I'm not a day trader. On a day trade, you're wildly swinging. Like if you were day trading this week, you probably lost your butt, right? Especially if you're trading the indexes. So not a huge fan of stop losses. Rule number 9, one of the most important ones. Know when to stop trading. Just like I said, start of this segment. If your goal is to make a couple $100 a week, a month, that's it. You're done. Don't look back. Keep educating yourself. Keep informing yourself. Keep looking at charts. Keep doing all this. Add to your level of consistency and confidence, and then come back again. No need to chase. No need, look, one of my mentors, again, I'm going to quote them frequently. He said, markets open every day. Like cryptocurrency markets open 24 hours, 7 days a week. There's always something moving, right? But at some point, you need to take a stop. You need to, and especially if you blow your account out, do not come back after a week. That's like getting dumped by your boyfriend or girlfriend, and then the next person, the rebound person, is never going to have a chance. That's you right there. So don't, at some point you need to stop. You need to reevaluate. Is this for you? Is this for you physically? Is this for you mentally? Is this for you spiritually? Are you set up to be a successful trader? So there has been a period in my 30 years that I've stopped for a solid 6 months, right? I had a massive drawdown. What happened in the days of Enron, and I go, I have to reevaluate because it was a mental mess, right? And then you come back stronger. So know when to stop. And rule number 10, I talked about this, keep it in perspective. Not everybody can be successful at this. Can you be successful at this? Absolutely. Will you be as successful as me? Probably, or probably better, right? But there is something called beginner's luck. It's true. It definitely is true. And I would highly recommend keep it all in perspective. If you're going to quit your 9 to 5 and do trading, you better be ready for it. You better be ready for the for the best roller coaster of your life. So with all that said, and one last segment, and I'm going to share my screen, and then actually I'll answer some questions if there is any questions. Here's my little Robinhood account, which you guys can use the link. I'll get like $5 in shares probably. So this was when I first funded the account last Friday. So when I did the live stream, we showed you guys this, right? So I took 5 trades this week, 5 only. Okay. None were day trades. Okay. And I will be happy to share that with you guys. But then I'm just going to show the equity as of 9 a.m. today. I closed actually my last position, which was short in Facebook. And this is where my account stood in 5 days later. So I started with 1,000. I'm at 1190. 1190 is about $190. This is all after commissions paid, everything else. Obviously, I'm doing with Robinhood with commission free. Not bad, 19%, right? I take it. So is this account going to blow up, or is this going to account be $100,000 at the end of the year? I hope the latter. This is not typical, right? I took 5 trades. I made money on 4 and lost money on 1. And I took my loss, and like a man, I got out. After I took my loss and got out on that stock, it went down another 60%, right? So it teaches you, the rules. Take your losses because those are the best trades that you're going to do. And is my success rate always 80%? Absolutely not. If my success rate was 80% all the time, and with my risk management skills, I would double my account every month. That doesn't work like that. My success rate is about 62%. Here's a question. Even if you're at 50-50, okay, can you double your account? Absolutely. How? You let your winners run and you take your losses, right? So that's when risk management comes in. That's when rules of trading comes in. That's when knowledge, experience comes in. So not bad. I'll take it. Let's see. I'm going to post this on our community page. Please share it. Full transparency. I'm going to tweet it out as well. So 19% for a week that was really, really volatile was absolutely I mean, it was, I think I'll take this. Will I take $200 every week or $190? Absolutely. But this goes to show that you don't have to have 6-figure trading accounts to be successful at this. Is it more pressure? Yes and no. I mean, I'm doing the same thing in bulk or much bigger size on my actual trading account. Basically, that this reflects what my actual trading account is doing, how it's performing. So I'm going like, hey, this is where we are. Pretty good for a week. What do you say, Chris?
Yeah, not too bad.
Yeah,
especially the way the market's
done. 19% is better than 5% for a year in a CD. I mean, is it going to be 20% a week? I hope it's more. Some weeks is going to be less. Nice. Yeah, absolutely. But this goes to show, this is the challenge also, by the way. If you want to fund an account, let's have a competition to, beat Sergio, right? I hope you can beat me. If you can beat me, all power to you. But then over long periods of time, like by the end of the year, I'm pretty sure I'm going to run circles around you all. But that's the point I'm trying to make is small accounts can also have success. So on next Friday, I will show the account again. Every Friday, I'm just going to post it. Up, down, sideways. I'm just showing you the equity. Out of 5 stocks, account or 5 trades, I'll give you the symbols. One was Root, which ROOT. They're an insurance company. I was long the stock. I bought it at 50 and 52. I sold it all at 60. It was 5 shares each. Not bad. Money's money. Then another one was Serve Robotics, SERV, which I told Chris to buy as well, but he didn't. And Serve Robotics, by the way, guys, is those little bug-eyed robots. The company went public via a reverse merger. The symbol is SERV. That was a good trade. I made money on that. And the third one is the loser. I lost money on that trade. The symbol is NIVF. I bought the stock at 240, couple of hundred shares, and I blew it all out at 225. 220 range, so I lost a little bit on that. And then last 2 days I traded Facebook options. So don't worry, we're gonna start talking about options on Monday, which is a derivative, which is what I do quite frequently. And then I also had Facebook puts, meaning I was betting that they're going to go down. I sold it a little bit too early, but I'm happy with my return for this week. So with that said, let's see. All right, let's see the questions. Good risk management. Yo, Sergio. Hey, Matt. Yes, Deborah, you're going to learn. I suggested a couple of books. Please pay attention to those. What were the positions? I said it. So ROOT was one stock. You can start following those charts. SERV was the next one. The third one was NIVF. That was my loser trade. And I traded Facebook. There you go. So yeah, let me talk a little bit about this week's and what happened. Let me put this. That's my trading screen. Let me go full screen. All right, so this is my trading screen. I showed this to you guys last week. I'm gonna have hopefully the second screen by next week, so we can do this both at the same time. I'm gonna put myself down here. I learned this, Chris, today. How do you like that?
Nice.
And
There you go.
there you go. Okay, so you guys can see my screen, right? All right, I'm gonna go through a couple of the major earnings. Microsoft was one earnings. So here's, this is a pattern, right? We talked about charts. Well, there's charts for you. This is Microsoft chart going back a year. Stock on the I'm moving my cursor. You can see that, right, Chris? Lower left hand. Remember, I told you trend is your friend. So if a chart is going from the lower left-hand corner of the screen to the upper right-hand corner, well, it's a good thing. Are there pullbacks? Are there sideways action? Of course there is. But then that's the trend, right? And so once you start learning technical analysis, there are certain patterns, okay? And you're going to learn all these patterns. Now, Microsoft obviously had a pullback, but earnings came out. The stock is popping today. It's still not an all-time high. This is Meta, Google. Old Facebook stock again was in an uptrend. Now the trend is broken, right? So my thing with Meta is going to be, again, the fundamentals are okay on the company, but they said they have to spend a lot of capital to race with Google and other AI players. And I think stock is going to underperform, right? Like today, the market's up 364 points in the NASDAQ and up about 250 in the Dow Jones, which I don't pay any attention to, or S&P 500 up about 1.3%. NASDAQ is up 2.3%. Meta is down. So this is what the relative underperformance is. So I will be a seller of Meta on any rally until proven otherwise. Google came out with earnings, or Alphabet. There it is. There is another wonderful trend, right? And the stock is at an all-time high. They issued their first dividend, becoming a big boy now, announced a $70 billion buyback. I mean, what is wrong with this chart? Absolutely nothing. One little quick thing that we're going to start the technical analysis part. Do you guys see I just highlighted a light blue line, right, Chris? You saw that, and we did actually a little tutoring after the session last week. That's called the 200-day moving average. We will talk about this starting the nitty-gritty of these things next few weeks on Power Hour, and we're going to put videos out. What is happening to the stock, right? I mean, if you guys look at it from the lower left-hand corner to the upper right-hand corner, right, it frequently gets close to the 200-day moving average, and it touches it, right? And then it turns back up like a miracle. Is it a miracle? Not necessarily, but I think it's one of the major indicators that I follow, right? If a stock is in an uptrend, it's great. Now, Google for a year, last year when the Fed was raising the rates, wasn't a downtrend. It was under the light blue yellow line, which is the 200-day moving average. Okay. Once it went above my cursor is right here. I'm just circling it right here. Once it went above it, which was about $105 a share range, now it's been holding above it, right? So on any pullback, Google should be bought or Alphabet should be bought because you're going with the trend. On the way down, Google should be sold on every time it touches the blue line. Is it the magic blue line? Not necessarily, but it's a very long-term indicator, but it's a very good one, very successful one. Let's look at NVIDIA, right? Where did NVIDIA, I'm going to highlight my blue line. Where did NVIDIA cross to the upside above the blue line? Well, right here, I'm circling my cursor. About 172. Today is 879. When was that? That was December of 2023, people. That's about a year and 2 months ago. Now, what kind of return is that? All right. If you bought NVIDIA, you're still holding NVIDIA. Okay. Long-term trading. Well, that's like 500% return. I mean, if you can do that in day trading, good luck to you. You're not going to do it. And if you do it, you're just going to have more fun, but I'm going to make more money. So this is a simple way of looking at it. I'm starting technical trading analysis with just simple watching a 200-day moving average. When a stock is below a 200-day moving average, you do not want to touch it until it goes above. Now, you can touch it by shorting it, meaning by selling it first, but I will explain that in the next couple of episodes. What else? Amazon, right? These are the big names that everybody follows. Look at it. I mean, stock comes back, touches the blue line, goes back, turns back up. And conversely, when it's going down in a downtrend, stock touches it on the upside and then turns back down. This is not magic, right? This happens every single goddamn time. And then I'm going to show you one that has been a disaster, like Boeing, right? Okay, look at Boeing. I mean, stock broke the trend line, and actually, instead of looking at Boeing, let's look at Tesla, everybody's love, right? Tesla has been underperforming for forever now. Okay, and here's your blue line, right? The 200-day moving average. To me, can you get whipsawed by trading the 200-day moving average? Yeah, you can, but your losses are going to be limited and your gains are going to be massive. Going back to risk management, keep your losses short, keep your advances running. So how's my week? And then let me show you guys the stocks I traded this week. Root was one. Well, I mean, here's your perfect example, right? There's different moving averages, by the way, which smooths out the violence in the equity. So there's 20-day, there's 5-day, 12-day, 20-day, 50-day. I have 3 of them on 20, 50, and a 200 because that helps my trend trading. So Root broke out at $10, hit 80 and 85, I don't know, in about 3 weeks, a month, right? And then it went from 85, follow my cursor on the upper right-hand corner, for 85 down to 50, and I bought it at 50, 51. Why? And you guys will also see this line. That's the 50-day moving average. Just for more my style, short-term trading, shorter, right? Position trading. So I took a position and blew it out in 3 days. Made my money. I'm good. Can it go back to 80? Yeah, but then you got to also can't be too greedy, right? You got to be pigs get slaughtered. So Facebook, or Meta showed you guys where that is at. I will be shorting or selling Facebook every chance I get now. I think they have some troubles going forward. Well, they will definitely underperform. So with that said, let me put up the chart of what I day traded today, or what my system did. I didn't. I can't be that fast. Okay, so this is a 1 minute chart of the NIVF, right? I This is my big account, and my actually small Robinhood account. I lost money on the stock. I lost money because it was right there. So the stock had gone from $1.30 to $3 in a matter of hours. And I bought the pullback, and I was right here about 240. I bought the pullback, and I was wrong. And then I blew myself out with my risk management guidelines, and I lost 20 cents. Okay, no big deal. But then I made up, and my Robinhood account is up 19%. Well, this morning, as you guys can see, this blue and yellow lines, which are the moving averages, are also valid, right? And let me show you guys. I bought 8,000 shares on the way up, and I blew it all out. So here is the account details. Here's the realized gains and losses. So I bought 8,000 shares, sold 8,000 shares. This is my daily P&L. I traded also Meta in my day traded Meta in my trading account, and here we go. It's a pretty good day. I don't know. What is that? That's about 3 grand, 4 grand, or whatever. But again, this account is a lot larger, and the risk taking is a lot different than my Robinhood account. But I pretty much mirrored everything. I had puts on Meta on my Robinhood account as well. Made some money there yesterday and today. So pretty good day, pretty good week for me overall. Yeah. But we're gonna go into the nitty gritty now. Starting next week, class will be in session. So this week's what do you call it? This week's lesson is watch the videos again. We're going to put the videos out. Buy those books, start learning technical analysis. Okay. And number 2, that's your homework. Start learning so we can talk the same language. And what else? Let's see. So that's my screen.
We got a couple of questions, so let's go through them right now. Okay. So here's the first question.
So let's answer the questions. All right. What were the tickers? So I gave you guys the tickers. How did you know to cut your list?
No. It's on
cut
screen.
My list?
Don't look
I am
at the
not
chat.
sure. What do you mean cut my list? Okay, I'm an experienced selling options. I rarely am successful trading long or short on equities. What's your advice for someone who has capital entering the market? I'm working on scaling my buys now. Okay. Selling options is profitable as long as you also have certain risk tolerance that you can take. I don't know. Chris froze. Am I frozen? You guys can hear me? Put thumbs up. You're freezing.
I hear you.
Am I frozen or you're frozen?
Nobody's frozen.
Okay. Can you guys put a thumbs up in the chat, please, that I'm not frozen? Okay. So yeah, selling options is fine. It's a very advanced version of option trading, derivatives trading with practically unlimited risk, right? I mean, if you're selling calls on a stock that's going up like the GameStop, you would have lost everything you had. Selling options, especially put options, is good if you want to acquire a stock at a cheaper price. Like selling puts would be perfect, let's say, on Meta now. If you want to buy Meta at 400 or less, let's say stock is 450, you sell puts, and all 98% of puts will expire worthless unless you're right on the strike price. This may be advanced for you people, but we'll get into it. But I'm answering his question. So hopefully that answered your question. Are you using technical stops? Are you stopping out based on a percent of the trade? Not necessarily. I'm entering and exiting at the places that I want to, basically mentally, really. And I have limit orders in on the way down and on the way up. I mean, and then the stops that I utilize, if I'm long a stock, I definitely have a stop. Like when I traded Root this week, I bought the stock at 50 on its way up. I will never buy anything on the way down. Okay. I'd rather buy high, sell higher. Okay. That's my motto. So when the stock turned, my indicators turn, I bought at 50, 52, blew it out all 58 to 59. How are you screening for opportunities? These are really unique underlyings that have low liquidity for the most part and hard to short. Not necessarily if you're a professional trader. I mean, look, there's many scanners. I use a couple of different scanners that come with my trading system. If you're part of, I bet you anything, if you're part of Schwab, TD Ameritrade, Robinhood, and Webull, they all have scanners. You can set your scanners. You can set the filters on your scanners according to you. Like I have set my scanners. I'll give you those numbers over the next few weeks. Finding scanners is not that difficult, really. So that's why I wake up at 5:30, because I look at what's moving, and if I'm going to high frequency day trade those things. So at what percent do you take profits and what take loss? Okay, that's a good question. Look, so like I said, let your profits run, take your losses, cut your losses short, just like I traded in my Robinhood account that week. The stock that I traded, NIVF, I took a 6% loss. I looked, it was about 6 to 7% loss, and then let the winners run. Once I establish that account, right, with less pressure, I will start holding things longer. Instead of a day or two, I will start holding things longer. But I want to have a good start, good leg up on that before I start holding things longer. Mumu has free scanners. There you go, Jose. Everybody has free scanners, but then you have to set the filters in your scanners. I mean, do you want to set your scanners to show you everything? Is there a catalyst for that stock to go up? Because there is a lot of pump and dump that goes on in our marketplaces. So you really need to be careful with that. And how do you short a stock that's not available to short, right? Well, that's when the professionalism comes into play. That's what dealing with trading houses that are not your Robinhoods and Schwabs and TD Ameritrades come into play, because they're not going to allow you to short certain things. Certain pump and dumps are perfect way to make money. But then if you have some institutional account somewhere, then they'll let you short those things, even illegally short. It would be great to learn the settings of, scanners, like my scanners are set in a way that I don't want to look at anything under 1 million shares of trading, because my high frequency day trading system may trade 100,000 shares of the stock. I want to be able to get in. I want to be able to get out. There has to be enough liquidity, number one. Number two, the pricing, right? And then obviously that's why you look at the fundamentals, or do you look at the news? What's the catalyst for that thing to happen? If there's no news and stock is being pumped, I'm not interested whatsoever. If they have a good catalyst, it could be a multi-day move. So my day trade could turn into an overnight trade. The other thing is capitalization, right? The way I look at things is it a small micro cap, which is like nothing, mid cap, small cap, or large cap? It depends on your mood. It depends what has worked for you. What works for me is nothing less than $2 a share. And that's a given. No market capitalization less than $100 million, which is kind of get rid of all the penny stocks and micro caps. And then the other thing that I really pay close attention to is the catalyst. That's when I start looking at it. Like, why is this company going up by 100% today, and can it go up by another 100%? Like that stock that I traded made 8 points on ROT, right? Stock was dead man's EKG, went sideways for 2 years, but when it broke out, the trend got established, and then what? It went from 10 to 85 in a matter of months. Okay. So the catalyst was that they have a proprietary insurance product that could revolutionize the insurance industry, and they could actually get acquired now. But again, that's the news. Now you can comfortably trade that stock. But if you were holding that stock for, I don't know, 2 years, you'd be just waiting, doing nothing. You use a prop firm to short and hard to short? Yes and no. I use Goldman Sachs to do that. I'm trying to learn to go long equity. My issue is, absolutely. I think or swim is good, actually. Schwab is going to they bought TD Ameritrade. Go long equity is easy. I'm not sure why. Ayn Rando. I like your screen name, by the way. Why is it so difficult, right? Find the trends. There's 10,000 stocks. Markets open 5 days a week. You can definitely find trends. Another recommendation for Ayn Rando is stockcharts.com or Investor Business Daily. They have their own proprietary, they have their own proprietary systems that they, find stocks that all the stars have lined up, so you don't have to do much work. Yes, you will have to pay a little bit, but you get what you pay for. I mean, it's not that expensive. It really isn't. I have IBD, Investor Business Daily. I've had them for, I don't know, 10 years plus, as soon as they, figure that out. Yes, it's mainly patience and psychology. The 3 P's. Don't forget, patience. You don't have to trade every day. This is the new thing with these kids. The meme stocks and jockeys. Oh, I have to trade every day. I mean, no, I sit on my ass or my hands, like unlike the old days, selling and buying. I sit on my hands 80% of the time. I mean, I don't have to trade. I want to have the perfect setup for me that has worked for the last 30 years. I wait. Patience. Number 2, position. What's your position size? You want to put all your eggs in one basket and hit a home run? Good luck. Well, the chances of getting blown out is pretty easy, right? And planning goes with education, with information, with reading, with with looking at these things. So to me, apply the 3 P's. It's really, really patience. Psychology is important, obviously. Not everybody's cut out for trading, man. 19% in a week. You did fantastic. Thank you. I hope so, but a lot of stock jockeys probably made like 100% this week, and they're going to go, it's nothing, 19%. But you know what? To me, it's a marathon. It's not a sprint. There's pressure to trade $1,000 stock equity account. I don't have, $1 million that I'm trading within that account. If I did, I'm pretty sure. On my personal account, by the way, I was up 27% this week. But that's a much different story. I outdid it because I had more holding power, right? And I traded different things. The other thing on that small account, people, there is day trading rules. You can only day trade 4 times in 5 business days. If you day traded more than 4 times, you're going to get hit with a violation, and it's called pattern day trader, and they will require you, every brokerage house will require you, under Fed rules, for you to deposit $25,000 in equity. So if you're going to day trade, make sure you're counting. Don't do more than 4 in 5 business days. Be careful with that. A lot of people fall into that trap. They want to get in, get out, get in, get out. I'm like, that's not my thing. Patient position planning. There you go. Good idea for a shirt. There you go, Chris. We have our merch ready to go. Patient position and planning.
All right. Question for you. What is your thoughts coming up with the Biden call for raising the capital gain tax to its pretty much highest point since it was created?
Yeah, I read about that. I think it was 44.6%.
44.6%. Yep.
Yeah, 44. I was right. I kept the number in my head because I may be falling into that category. As if I'm not paying enough taxes, but it's okay. Oh, by the way, for taxes, if you're day trading, short-term trading, okay, your taxes are it falls into your income, whatever taxes you're paying on your W-2 or regular income, okay? So don't be fooled. You're going to pay a lot of taxes if you're day trading in and out. There's also many other things. We'll talk about those shortly. What's my opinion? I read a little bit deeper about it, Chris. It seems like there isn't much into that, because you have to have $1 million, okay, in regular income, and you have to have $400,000 in trading profits for you to get up to that 44.6 level. So it could be like a little bit, in the media, it got blown a little bit out of proportion, but higher taxes, I am completely against. And
I think everybody in
yeah,
that
and
would be,
with
especially when
permission
it
of
comes to
you
trading.
all, I will talk about taxes. You can't avoid taxes, death and taxes, but there are ways you can do. You can have accounts in different places. We will get into that. That's like a lot future down the road, right? Maybe next year in taxes, when I move that Robinhood account from $1,000 to like 100 grand, that's when we can say, okay, shit, I'm going to pay taxes on that now. But anyway, so if there's any other questions, Please put them out because we're about to go away. So it was a good week. More earnings coming out next week. This is the earnings season. Please start learning about technical trading. Okay. AMD. I like AMD actually. I talked to Chris about that. Valero. Let me take a look. AMD. I like right about here, right above. It's okay. So let's go to AMD. Let's go to AMD. Here's AMD. And here's the daily chart of AMD. All right. So what are we looking at here? AMD. Yeah, I mean, look, what did I just say about the blue line, Chris? I mean, look, it came right down to it about 146, 145. I'll give it a shot here with a 6% risk, a break below the blue line. I'm okay with it. I like it. Stock was at 227, sold off all the way to 145. I mean, yeah, I think it's a good entry right here. If you've been holding the bag since 220, good luck. Pigs get slaughtered, so you got to take profits. Yeah, I like AMD here, about 150 range. With a stop, mental or physical stop at 145, 144. Small risk, 3 to 5% risk. The other one was Amazon. Amazon. I mean, nothing wrong with it. It has a little island reversal. You guys will start reading technical books now. Island reversal. You need to pay attention to these words, keywords, gaps. Start learning. If you already know, we'll get deeper into it. If you don't know, please get into those books and learn it. Yeah, I mean, Amazon looks nice. It's still in an uptrend. Had a little pullback, 190 to 165, about, I don't know, 15% pullback, but the market pullback. Same thing. Beta on Amazon is pretty high. And last one was on Valero. Valero, beautiful uptrend. I mean, look at that, right? Stock went sideways. Here's my cursor moving side to side, right on that blue line. It clearly broke out right about 132 and then hit 185. I mean, look, it's like, this is not even, what is this right here? Was January 22nd. We're April 22nd. In 3 months, you'd have made 60% or 50% on your money. I mean, in what world, right? And then it's having a little bit of pullback, a pullback in an uptrend, completely reasonable. Looks pretty good to me. It should test all-time highs. So those three look pretty good. Other than that, I think we're going to be done with it today. Good point about YouTube videos. Yes, hope to learn more about how to. Yeah, cherries in the stock market are not as easy, but you will find it. What do you think about the upcoming? Okay, I answered that question. Any other questions? No. Okay. So we'll be back on Monday. I'm going to rest over the weekend, do a lot of traveling for my son's soccer. It was a really, really good week. I liked the volatility. I took advantage of it and hope you all did too. And can we show my little trading account one last time? So here we are. I opened the account last Friday, $1,005.58. Today, $1,189.96. It's all cash, as you guys can see. I have no open positions at the moment. My opinion, I think market's going to have a difficulty here. If not down, it's sideways at best. You got to be really careful here. When the market's going down, it's easy to make money. When it's going up, it's easy to make. When it's going sideways, you're going to get chopped around. So be careful. My opinion. And join us Monday at 10 a.m. Pacific, 1 p.m. Eastern. And then the new week will begin. Other than that, hope you have a great weekend and see you all later.